Another Monday Mortgage Moment. My name is Brenda Sainemond, and I am an independent licensed mortgage agent with Mortgage Sense located in Barrie, Ontario. Today, I wanted to talk briefly about private mortgages, not necessarily from a borrower's point of view, but from an investor's point of view. So sometimes what happens is if you are a homeowner and you're looking to borrow money against your residence, sometimes you don't qualify for traditional mortgage financing for whatever reason. It could be that you've had some challenges with your credit, maybe you're self-employed and your income verification isn't what lenders typically like to see. Maybe you're in a construction phase and it's just really challenging to put a mortgage on your property right now. So one of the options available to homeowners is to get a private mortgage. So what a private mortgage is basically an individual who has money that they want to invest, but instead of putting it into stocks and bonds or buying a physical real estate property, they actually loan their investment money to the homeowner. So the investor is secured by a mortgage on the property that they're loaning the money against. So there is security there, which is sort of nice when you compare it to the stock market, because when you put your money in the stock market, there's no guarantee that you're going to get that money back, right? The stock market could have a major correction, which we have seen over the last few months. And there's no guarantee that you'll get back even 50% of what you invested in there. Whereas when you do a private mortgage, you actually hold a mortgage on the property that you're loaning the money against. So there is some security there. Now, private mortgages can be done as a first mortgage charge against the property, and sometimes it can be done as a second or a third. Obviously, the lower charge that you have against the property, that usually means that there's another lender or there's another financial institution that has a mortgage who takes priority over yours. So that is going to affect your risk. But on the other side, it also affects the rate that you can charge as a private. So there are ranges. I don't want to say specifics as far as rates and fees are concerned, but when you're lending money out as an investor on a private mortgage, there's usually a fee up front that the borrower pays. So that would be money that you'd be entitled to. The borrower also pays your legal fees. So you don't have to pay for a lawyer to register your title on the property. And then your interest rate, depending again on whether it's a first mortgage, second mortgage, third mortgage, interest rates vary and they can go anywhere from 7% up to 14 or 15%. So the interest payments will be made to you on a monthly basis. And then the terms can be anywhere from a very short period of time, say 3 months, which would be applicable if you had someone who was just trying to finish up maybe some construction on a property. And sometimes they can go up to a year, possibly 2. They aren't meant to be long-term solutions, but in the short term, they can really work well, both from an investor point of view and from a borrower point of view. Obviously, a lot more information we could talk about. I want to keep this short, but if you have any questions about how to obtain private money for a mortgage or how to be a private lender, please reach out and we can have more of an extensive conversation about that. Hope you're enjoying the wonderful weather that we're having and staying safe. Again, my name is Brenda Sainemond. I am a mortgage agent with Mortgage Sense, and I thank you for tuning in. Enjoy the rest of your Monday.